Good afternoon, this is Brad Dennis with BIS Commodities with your afternoon update for the week of April 29th to May 3rd. Kind of an overview is we're focusing on weather and the ags. Economic data was out this week for financials that was sufficient or significant, and then the changing of the April to June in cattle has caused a little bit of a stir in the cattle market as well. But start off with the financials. This week, a lot of economic data was out this week. Personal consumption expense came out. We didn't see any kind of inflation. We had the FOMC meeting, and they talked about still buying $85 billion worth of treasuries on a monthly basis. So the QE3 is still in place. It's still running strong. They have their target rate of 6.5% unemployment. Today, we saw unemployment figures. They were better than expected. We saw 165,000 on the non-farm payrolls. Everybody was looking about 135. And then as far as the unemployment rate, it went down to 7.5%. And that's getting closer to that 6.5. So is there going to be a point where if that unemployment rate gets down, we hear more and more talk about stimulus leaving or the QE3 ending? Of course we will, but that's not for a very long time. You're still big difference between 6.5% and 7.5%. Interesting that you did have Chicago Purchasing Managers Index, or excuse me, yes, Chicago PMI this week. It was a reading under 50. That's showing contraction in the manufacturing departments, yet though we had the ISM services number out, and that's showing a 53 reading, so still some expansion there. So manufacturing might start to struggle a little bit, but it still looks like private payrolls are going up, and we're hiring right now. Internationally, on Wednesday, we had a poor reading on the manufacturing index out of China, and that caused an overall commodity sell-off. Everybody's very worried about China's growth. Will it leak under 7% or not? And that is a real concern because they consume so many of the raw materials out there that they need to continue to keep buying to support prices. We also saw the European Central Bank cut rates this week, more in line with what we've previously done. They haven't gone as far as buying bonds back and doing any kind of QE quantitative easing there. They're hopeful that the recession goes away. They're hopeful that a rate cut will stimulate a little bit more business and a little bit more lending as well. Stocks showed up today. They were at the best levels that we've seen, and that's a plus on the stock side. Stock market is, people call it the energy ice bunny that just keeps going and going. It's a market right now that if you have good news, it means that things are going well. If you have bad news, it means that more stimulus is coming in. They just continue to add on. Remember the old adage, sell in May, walk away. We'll see if that comes true over the next month or so. At the beginning, I mentioned cattle, and it's kind of an interesting dynamic in cattle in that, all right, this week we went from the April contract to the June contract, and there was a $5 inversion spread on that, all right? A lot of traders or a lot of livestock guys thought, all right, I better sell my cattle while I've got the April price on the board, because come June, guys are going to be offering me $3 less because of that $5 spread. Well, it seems that enough cattle was sold last week that when you get to sale barns this week, minimal were left. And with boxes being on fire this week, going up $7-8, the packer had a little bit more money and was able to go out there and bid at some pretty high numbers, 207, 205 in some areas. So significantly higher prices for the live cattle, yet we're seeing June futures come off today, it's kind of becoming one of those same scenarios of what we're seeing in corn, whereas the cash market is being used to procure the product, whereas the futures are dragging behind. And in that note with cattle and corn, there is a little bit of a lack of interest in the ag commodities at this point. Over in the grains, weather. It doesn't usually snow May 2nd in Iowa. You don't have snow days in Iowa in May. Well, that happened this week, and it was something that we saw on Sunday night in the forecast, and that's why we put 40 cents on the market on Monday. We're watching it go by now. It's already been traded, and for the week I think we're up about 41 cents in July corn. Moving forward, what do we see out there? Well, we saw the bid come in because of the weather scenario, but we also saw that open interest for corn went down over 50,000 this week, meaning we had a short covering type of rally. We're not seeing the big funds come in to establish overall long positions. We're not seeing these guys saying, hey, I need 5, 6, 7% of my portfolio being in commodities and just getting into the long position and staying there. So with that, you've got your weather guys that are bidding this market up and that short-term money. If we have a change in the weather Sunday night, you could go right down and retest that 640 level that was supportive during the middle of the week. Hand-to-mouth type scenario with corn, in that if you need to get the physical product, you just up your basis. Board's still lagging, and that's shown because of the short position that's out there. Exports are non-existent still, so really you're just satisfying the domestic demand, and that's being taken care of through basis. Over in the beans, similar scenario, whereas our export market has suddenly come to an abrupt halt. Nobody's buying beans from us anymore right now. They're canceling some. Previous sales have been canceled. We saw last week and this week in our export sales numbers. Also, we're also hearing wind of boats coming up from Brazil, possibly arriving in the U.S. in the next 2 weeks. And that was seen months ago at the end of January, where you had $1.50, $1.60 spread between the bean market that was here in the U.S. and the bean market that was down in Brazil. Found out it's just cheaper to bring them in than to pay that forward rate for them. Basis still strong here in the U.S. $1.20 over, depends on where you're at, but that is something that will definitely take a hit should we see boats show up with the beans. Maybe a little hint to that was this week when that May-July bean spread broke down about a dime. So I think that there's somebody in the know about it. Once again, I'm repeating some rumors, which I hate to repeat, but you have to be aware of it, and when you see that May-July spread come in a dime, you have to wonder what's happening with it. Overall, you look at what's happening out there. You're looking at tight supplies in the old crop. You're looking at the slowest planting progress we've ever had. You're looking at snow in Iowa, and we still can't get these grains really to reflect where the cash price is. And maybe it's just a instance of lack of interest in them for now, and maybe you have to get to the point where the end users who are using the physical product, they can't find the physical product and they have to buy it up on the board and count on deliveries to get those bushels. But we'll see. That'll play out down the week. Next week you're looking at weather is all important for the grains. See if there's any kind of windows of opportunity out there. And then in the financials, you want to wait and see, hey, is this a profit-taking opportunity, and people kind of take some money off the table going into the summer months. So that is what we're looking at. That is the wrap-up for this past week, April 29th to May 3rd, from BIS Commodities. End of broadcast.